Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about DoorDash. So we're going to discuss its growth rates. We're going to talk about how 2022 is going to look for the company in terms of revenues. Then we're going to talk about the overall landscape. Finally, we're going to bring this all together and talk about its valuation. So let's just get stuck in right here. So if you're familiar with DoorDash, you'll know that it had a very strong 2020, and since that period, its revenue growth rates have really contracted and decelerated. Now, the question mark for investors is, what does this stabilize at? And it's quite difficult at this stage in the game to know, because obviously it's a young company. It has a very strong backdrop where consumers value convenience. So there's different dynamics at play. But let's just work with the company. Let's say, okay, so if we assume that we take the guidance for this year, which is for 350 million of EBITDA, and we're going to say that all considered, the companies so far made close to, let's say, 150 million for the first half of 2021, and we take its high end of its guidance, that means that per quarter for the second half of 2021, they're going to make about 100 million of EBITDA. So if we say, okay, they're improving their operations and that the EBITDA line can expand next year and grow by 50% compared to 2021, at that point, the company would make approximately 525 million of EBITDA next year. That will put the company trading at approximately 118x forward EBITDA, which, you know, it's a rich valuation if you think about it, because firstly, you got to think about that what the consumer really wants. Yes, they do want the convenience of getting the product, let's say the pet food or the food delivery or whatever. They want to get that quickly, but they also value price. So it's, you know, you're competing with that dynamic right away. So it's difficult to envision a scenario where DoorDash is going to be able to jack up. It hasn't got a lot of pricing power, in my opinion. Yes, you can put some convenience around the way that they make it easier for merchants to get their products delivered, but I think that it's going to be very difficult for them to get any sort of pricing power here. The other thing, obviously, you got a lot of competitors in the space. You got Uber Eats, you got Grubhub, Postmates. So, you know, you got Just Eat that's also going to make at some point in time its move to the US. So I mean, it's just very difficult. It's very competitive, and you know, the merchants can also themselves just figure out how to deliver their own products. So it's difficult. Okay, it's not impossible, and there's plenty here to kind of give shareholders something to bite on in terms of positive aspects. But it just is. I'm just saying it's difficult. Okay. Now, let's assume that after this year, so let's say that they're talking about their gross order value to be kind of flattish for the second half of 2021. So, you know, let's just extrapolate that they're being very conservative, and actually what happens is that from H1 to H2, they grow the revenues by 5%. That we're talking about 4.7 billion in revenues this year. And let's say that next year, you know, they have a very strong year and the revenues grow by 30% year over year. So that's, if we look at the analyst consensus, that's higher than everyone else is expecting. Everyone else is expecting approximately 20%. So let's say, you know, they're all wrong and the company actually grows its revenues by 30%. You know, that's compelling, you know, that's strong, that's good. They reached 6.1 billion. At that point, the company's price is 10 times next year's sales. So that is not going to look too cheap. There are plenty of companies out there that are growing at 100%, priced at 10 times sales. Another thing to keep in mind is that DoorDash, as I talked about already, it's not going to have software-like margins, okay? So it's not like Amazon. So Amazon has AWS. Amazon now it's the third biggest advertising platform after Alphabet and Facebook. So Amazon's margins are improving, but that's not because of its delivering a product. You know, it's the margins that we're going to see in DoorDash are going to be really, really kind of, you know, it's going to be flattish. It's not going to be growing at a very strong rate. But let's just say, for the sake of discussion, that it's, you know, at some point in time, either 22 or 23, its margins, EBITDA margins come up as 15%. So if we say, okay, its EBITDA margins go 15% and it's growing to 6.1 billion, in this kind of hypothetical scenario, the stock is priced at 62 times this kind of hypothetical EBITDA number. It's not shocking, there are many companies out there that are priced even more expensive than this. So it's not the craziest valuation out there, but it's difficult to kind of get particularly excited and think that there's a lot more upside in this stock. There can be some room for some kind of positive delivery of news, as they kind of expand into new opportunities and new verticals. But when you're paying this large multiple, I think that it's really capping investors' upside. In any case, I hope you found this video useful. This is not a stock that I'm going to be investing in. I think that there are better investment opportunities out there with better risk rewards. I'm quite happy to go into something that's kind of slightly misunderstood, but I want to be very well compensated for that. If you want to find out what the stocks that I'm interested in, check out my marketplace. It's called Deep Value Returns, and you're welcome to do a totally free trial to see if it suits you, and you have absolutely nothing to lose from reaching out and doing a free trial. And if it doesn't resonate with you, you can cancel anytime before 14 days and you're not going to get charged anything. We've got a large investment community that's growing, and we bat ideas off each other, and it's really a place that I'm not going to replace you and what you do. It's just a place that you can come over and check out one or two ideas to see to really expand your portfolio. And sometimes you haven't got the time or the inclination to figure out, okay, I want a new idea, and you want someone to do the due diligence and to discuss ideas with you. And that's what my marketplace is for. You come over and you can check it out, and you can pick one or two ideas a month and see if it works out for you. In any case, hope to see you soon next time. Bye bye.